What's going on in New York City when it comes to some of these luxury retailers, such as Chanel. According to a person familiar, Chanel in discussions to buy 745 Fifth Avenue, but it's also competing against the likes of LVMH. This is, again, according to people familiar. And the fact that you see this competition among luxury retailers for some of these best buildings, these big name buildings, what signal should the rest of the market take from that?
What it is they tend to move cyclically with their stock prices and their business in terms of the luxury retailers. When their stocks are beat up, business is tough, they're liquidating assets that they own to folks like Thor Equities. And then sort of when the market starts to get frothy for them, which is operating outside of the real estate world, their own personal luxury businesses are performing well, they become buyers. And a lot of it's driven by fear or paranoia that will the next boom or the next demand wave for space cause folks like that, us, to take advantage and overcharge them for rents for the best locations out there. And so they're being preemptive now. A lot of companies believe that we've got big inflation coming down the road, maybe not short term, but down the road. And they view real estate, whether it's luxury companies viewing it or anybody from any industry that's conscious of the long-term potential macro effects of inflation, trying to preempt it now and take advantage of cheap pricing. If you look at, my view, should I share my view on inflation?
Yeah.
Okay. I view a bifurcated market today in terms of inflation. Mm-hmm. You've got my view of long-term inflation, which will benefit assets, hard assets like real estate, and then my short-term view on inflation. Long-term, all that government spending that we've been doing year after year, and might happen more before the elections coming up, combined with a world that's gone deglobalization, is creating a system where the infrastructure of so many companies and systems that are long-term focused are now being at threat, risk of a big hyperinflation coming down the road. That'll benefit, yes, it'll benefit equities, real estate, gold. I think that's part of the reason why gold may be moving up, even with interest rates moving up at the same time. And so they look at real estate being a hedge. And it doesn't look like it's any time soon than that deglobalization from world conflict is going to come undone. Yes, I do think Ukraine is toast. I think that Russia has already won. And I don't think the UK probably has a stomach with doesn't have enough ammunition. France doesn't have enough troops. And I don't know that America wants to put their energy there. Mm-hmm. America, at the same time, is creating some of that world conflict that could create the inflation at the other side of the world. You look at the fact that recently America put 2,000 Green Beret troops on a Taiwanese island closer to China. It sends a message to me that, hey, this thing ain't over. And right. With that comes risk of inflation, which affects assets like real estate.
So a lot to dig into there, but it sounds like what you're saying is that structurally there are some long-term forces that are going to benefit real estate there. And I mean, we could keep going on that, but unfortunately, I only have about 90 seconds left with you. So I do want to get...
I'll just say this. Yeah. I'll just say this on inflation. I do think tomorrow's CPI report's going to short-term shock people how much it's coming down. I think that a lot of it, we got fooled by car insurance rates and things that clouded some of those numbers. And I think that that's going to create big opportunities, particularly where I am here in Europe. I think that the UK stock market is 40% discounted to its peers. Companies like an Aston Martin at 4 times EBITDA versus Ferrari at 30 times EBITDA. And then I think real estate in all asset classes here in Europe, extremely undervalued based upon investors being stuck in the mud here in Europe, not being as aggressive as American investors are, looking to jump back in and take advantage of a bottoming of pricing.
So Europe cheaper than the U.S., but Joe, in the minute I have left with you, tell me about Electron, because I know you've come on Bloomberg TV, talked about it before. What is going on with that stock? It's an EV company.
First of all, we're really excited, obviously. The last time I was on your show a year ago, since then the stock price went up 400%, 4 times. And what it is the world, what's the challenge with EV cars? It all comes down to one thing, range anxiety. Am I going to run out of fuel, get stuck on a highway? And what this company's done now and really accomplished so much in the last year, they convinced Toyota and the biggest car parts company, Denso, to incorporate their technology in every single car. And you've got France, Germany, Sweden, Israel, the Autobahn, the 810 in Paris, Michigan, all putting in the technologies into their highways so that as you're driving, your car is recharging. And within the same philosophy, it'll be working soon enough if Electron gets its distribution that they're hoping to be eventually in every single driveway and every major industrial parking lot. So when you pull into a parking lot, a bunch of buses, 250 buses, everyone could be simply recharging overnight wirelessly. Mm-hmm. You pull into your driveway, it'll be recharging wirelessly. And so that's a company we believe in greatly. We found it because of the real estate aspect of parking lots, et cetera, and finding a solution that wasn't as difficult as individual recharges. It's a business, obviously, we're excited about a year ago here on Bloomberg News, and we're as excited, if not more excited, now that the whole world has woken up to the fears of range anxiety with EV cars.